By the end of this video, you will know the difference between an index fund, a mutual fund, and an exchange-traded fund. I've seen a bunch of content and I've read some articles on this exact same topic, and honestly, the explanations that I've come across are not very good, and that's why I decided to take matters into my own hands and make this video. And as I said, after watching this video, you will not only know the difference between an index fund, a mutual fund, and an exchange-traded fund, you will also have a much better understanding of the pros and the cons of each one of these investment vehicles so that you can decide which one is best for you. And at the end of this video, I'll also share what I personally use so that you have an even better understanding of what you should use in your own personal portfolio. Ladies and gentlemen, my name is Ravi Wadan, and this is The Beat of Business, a channel that provides free financial education that is meant to benefit you and your wallet. So if you could please give this video a like so that it is recommended to others, and if you could please subscribe to the channel, it would be greatly appreciated. To begin, I oftentimes hear people use the terms index fund, mutual fund, and ETF interchangeably, but that simply is not correct. In actuality, index funds are the product, and the way that you buy this product, or as we say in the investment world, get exposure to this product, is either through a mutual fund or through an exchange-traded fund, or better known as an ETF. And the best way to explain this is to use an example. And the best example that I can think of is the Vanguard S&P 500 Index Fund, because to my knowledge, it's the most popular index fund on planet Earth. Now, it's an index fund that, as the name suggests, invests in the S&P 500 index, which consists of the 500 largest companies in the United States. Now, in this example, let me just spell this out, the Vanguard S&P 500 Index Fund. This Vanguard S&P 500 Index Fund is the product. And honestly, it's no different than Apple selling an iPhone or Nike selling a pair of shoes. The Vanguard S&P 500 Index Fund is one of the products that Vanguard sells to investors. And this product can be purchased via two different channels or in two different ways. Now, the first way that you can buy the Vanguard S&P 500 Index Fund is through a mutual fund. And the second way that you can buy this same Vanguard S&P 500 Index Fund is through an ETF. And let's actually go back and use an iPhone as an example. Now, if I wanted to buy an iPhone directly from Apple, I could either go to a physical Apple store location, like in the mall, and buy the phone, or I could order the phone online directly from apple.com. Each method of buying the iPhone has its pros and it has its cons, but at the end of the day, I'm buying the same product, an Apple iPhone. And you can think of the Vanguard S&P 500 Index Fund as an iPhone. You can either buy it through a mutual fund, which would be like buying an iPhone at the Apple store, or you can buy it through an ETF, which would be like buying an iPhone from apple.com. And just like buying an iPhone in the store or online, each method has its pros and cons, and buying an S&P 500 index fund through a mutual fund or through an ETF also has its pros and cons, and that's what we'll cover right now. And really quick, I do want to point out that this structure that I showed you isn't isolated to Vanguard index funds. Many of the well-known index funds from providers around the world like Fidelity, Charles Schwab, Invesco, etc., can be purchased as either a mutual fund or as an exchange-traded fund. Now, in this section of the video, I want to take a more in-depth look at index funds. Particularly, I want to cover the key differences between mutual funds and exchange-traded funds. And to keep this relatively simple and straightforward, we will use the Vanguard S&P 500 Index Fund because it comes in both flavors. You can buy it as a mutual fund and you can buy it as an exchange-traded fund. And I went ahead and put together a slide that better illustrates the key differences between a Vanguard S&P 500 Index Fund mutual fund and a Vanguard S&P 500 Index Fund ETF. And for your knowledge, the mutual fund is sold under ticker symbol VFIAX, and the Vanguard S&P 500 Index Fund ETF is sold under ticker symbol VOO. Now, the first key difference between these two funds is how they are bought and sold. The mutual fund is sold exclusively through the mutual fund company. In other words, if you wanted to buy VFIAX, you would have to buy it directly through Vanguard. And to my knowledge, there is no other way to buy VFIAX other than buying it directly through Vanguard. And really, this isn't exclusive to Vanguard mutual funds. This rule typically applies to all mutual funds. They are usually only sold through the mutual fund company. So if you wanted to buy a Fidelity mutual fund, you would have to go through Fidelity. And if you wanted to buy a Charles Schwab mutual fund, for instance, you would have to go through Charles Schwab. You guys get the point, so let's move on. Now, unlike VFIAX, VOO can be purchased through any broker that you use to buy stocks. Now, since VOO is an ETF, it trades just like a stock, and that means that you can use Robinhood, M1 Finance, Fidelity, Cash App, TD Ameritrade. Literally, you can use any broker to buy Vanguard's S&P 500 Index Fund ETF. All you have to do is log into your broker app, type in VOO, place your order, and boom, you just made arguably the best investment in the history of the stock market. Now, the second key difference between VFIAX and VOO is that VFIAX, you need to have a $3,000 minimum investment just to start your index fund investing journey. And in my opinion, this is one of the biggest downsides of mutual fund investing, especially if you're young or if you're just starting your index fund investing journey. But the good news is that with VOO, you don't have a minimum investment requirement. Currently, VOO trades at around $400 a share, and all you need to get started on your index fund investing journey is $400. Actually, I take that back. You don't even necessarily need $400. Many brokerage platforms like Robinhood let you buy fractional shares. So technically, you could start index fund investing with VOO with as little as $1. The third key difference, or should I say similarity, between these two funds is that they both have an expense ratio of 0.03%. And for those of you that are new to index fund investing, this is the beauty of index fund investing. Index fund investing is extremely cost effective. And if you don't know what an expense ratio is, it's effectively the annual fee that Vanguard will charge you to invest your money in their mutual fund or in their ETF. Literally every mutual fund and ETF on this planet has an expense ratio. And for context, an expense ratio of 0.03% means that if you invest, let's just write it up here, if you were to invest $10,000 into either one of these funds today, Vanguard would only charge you $3 in annual fees. And the reason index funds, whether they are issued by Vanguard or from another fund provider, have such low expense ratios is because they are passively managed. Index funds, as the name suggests, track an index. And that means that there is very little human involvement in managing this fund, which keeps the costs super low. Now, with a fund like the Vanguard S&P 500 Index Fund, you're not investing to outperform the S&P 500. You are literally investing in the S&P 500 itself. On the contrary, many actively managed mutual funds and ETFs aim to outperform the S&P 500, and more than 80% of them fail to do so. And on top of that, most of those funds that are actively managed charge fees ranging from 0.7% to more than 1%. This difference in expense ratios may not seem like a big deal, but over the course of decades, it can equate to hundreds of thousands of dollars in savings. The fourth key difference between a mutual fund and an exchange-traded fund is the automatic contributions. And what I mean by automatic contributions is that you can automatically contribute bi-weekly or monthly without having to physically log in and buy more shares of the mutual fund or respective ETF. Now, with a mutual fund, it is extremely easy to do. Whether you're using Vanguard or any other provider, setting up automatic contributions is pretty seamless. Now, you can do this with ETFs as well, but it really depends on which broker you use. Now, I use TD Ameritrade and there is no automatic contribution feature. I have a reminder set on my phone, and every other week I go in and purchase more shares of VOO. So definitely this is an advantage for mutual funds in terms of automatic contributions. But I can confirm that you can set up automatic contributions on Robinhood and M1 Finance. Now the fifth major difference between VFIAX and VOO is how they trade. With VFIAX, the mutual fund trades once a day at the end of the day, and the exchange traded fund trades intraday just like a stock. Now for the majority of you guys, this really isn't going to make a difference unless you are trading an S&P 500 index fund. Now many day traders and institutional investors day trade S&P 500 index funds, particularly SPY. And with ETFs like SPY, you can buy short positions and you can buy options contracts, which you cannot do with a mutual fund. So if trading intraday is important to you, ETFs are the way to go. But again, I don't think that applies to 99% of you watching this video. Now, the sixth major difference or similarity between VFIAX and VOO is that they are both extremely tax efficient. Generally, ETFs are thought to be a little more tax efficient than mutual funds, but again, it just depends on your personal situation. Honestly, for 99% of you guys watching this video, the differences in tax efficiency between the two will be immaterial. And the seventh major difference, or similarity in this case, between these two funds is their performance. Now, I went online and grabbed the 5-year performance numbers for both of these funds, and their performance is identical. Over the past 5 years, both of these funds have returned 86.9%. All right, now let's move into the final part of this video. Let me put my Apple Pencil down, where I will discuss what I personally use for index fund investing. I personally use exchange traded funds. In fact, I don't own any mutual funds at the moment. I only own index fund ETFs in my IRAs and in my personal trading account. For me, ETFs are better suited to my investment style and they are better suited to my lifestyle. I can buy them in the morning, I can buy them at the end of the trading day, I can buy them whenever I want. On top of that, since I use ETFs to buy my index funds, I'm not isolated to one particular provider. If I want to buy a Vanguard index fund, I can do that. But I'm not isolated to Vanguard index funds. I can literally buy any index fund ETF from any provider as long as it's sold as an ETF. With mutual funds like VFIAX, you can't really buy mutual funds from other providers. You have to stay within the Vanguard platform, and for me, that's kind of a deal breaker. Overall, I think ETFs just offer a lot more flexibility in just about every category, except for the fact that you can't set up automatic contributions unless your broker allows you to do so. Now, I know that Robinhood lets you set up recurring investments, and I'm pretty sure M1 Finance lets you do the same thing, but I use TD Ameritrade and they do not. Boo, TD Ameritrade. Otherwise, ETFs offer more overall flexibility. They don't have a minimum investment amount. You can buy fractional shares of them on most broker platforms. They are generally more tax efficient, and you are not isolated to any one platform like you are with mutual funds. Well, ladies and gentlemen, thank you all for watching this video. I hope you got a lot of value from this video, and if you did, please remember to give this video a big thumbs up for the algorithm, and please consider subscribing to my YouTube channel so that you don't miss out on great financial education content like this. Thank you all for watching. I will see you all next time. ਪਹਿਲਾਂ ਸਾਡੇ ਨਾਲ ਸੋਹਣੀਏ ਪਿਆਰ ਕਾਤੋਂ ਤੂੰ ਪਾਇਆ ਨੀ ਦਿਲ ਦੇ ਵਿੱਚ ਤੂੰ ਲੈ ਜਗ੍ਹਾ ਕਿਉਂ ਮਹਿਲ ਪਿਆਰ ਦਾ ਬਣਾਇਆ ਨੀ